Jim Cramer says he likes Tesla and thinks the company will have a huge run in the near future, even if the coronavirus outbreak has resulted in production closures and a sharp decline in sales. In contrast to a lot of its automobile competitors, Tesla has very little to be unhappy about. Recently, Goldman Sachs returned to covering Tesla, recommending a buy. The firm believes that it is in a good position to profit from the long-term secular growth in electric vehicles, EVs, and we anticipate that its early mover advantage and technological cadence will help it to keep a healthy market share and gross margin. What then will trigger Tesla's explosive rise? And when will it occur? Continue to watch to find out. This week, Tesla formally opened its new facility in Germany, complete with dance performance by Elon Musk. This is the first manufacturing facility for Tesla in Europe, and it is expected to increase the company's capacity to produce 500,000 electric vehicles annually. Every year, Tesla's stock rises by 3%. In the final week of March, it has grown by more than 22%. Before this most recent spike, the stock had dropped roughly 44% from its 52-week high of $1,243.49. Nevertheless, Tesla is disappearing due to the price decline. In order to alleviate some of the strain from its existing facilities in China and the United States, as well as from global supply chain transportation and other issues, it will be looking to its new European site. Production problems, however, make it difficult for the company to operate at maximum capacity. It's important to remember that Tesla is undoubtedly still affected by the coronavirus shutdown. After being forced to close its Fremont facility, the carmaker allegedly asked several of its landlords for rent reductions. Tesla has made strategic steps to secure the company's long-term profitability and growth in response to the rapidly spreading global epidemic that is currently affecting our nation. As U.S. production slowed down, Tesla also had to reduce certain pay by as much as 30% and let rid of some staff. According to a letter the company sent to landlords that the Wall Street Journal was able to get, Tesla's stock has risen more than 340% in the past year, and the company's proposed 5-to-1 stock split has been well received by investors. The stock has risen as a result of the analyst upgrades the company has gotten. The electric car and battery manufacturer saw a recent increase in price target from Wedbush Securities analyst Danny Lives, who stated that he continues to see demand for Tesla vehicles in China. Ives told Northwestern graduate students on Tesla's compelling business case and stated that the Model 3 is still the company's key to success. Rob Maurer of Tesla Daily also emphasized the significance of the Model 3 and expressed optimism, pointing out that basic transportation in general is moving toward electric vehicles for driverless operations. Even though he hasn't always been a fan, Jim Cramer hasn't been silent about his excitement for this stock in recent years, according to Maurer. Though he will be the first to argue that stocks cannot be fined for speeding, he does wish the stock's current run would slow down a little bit. What opinions do other specialists have on this? Recently, Chip Curry, an analyst for Global Equity Research, made a fairly audacious prediction regarding the Tesla Cybertruck. The analyst, one of Tesla's biggest supporters, claims that the company will likely produce 2 iterations of the all-electric truck he predicts, an alpha version that will be roughly 15 to 20% smaller, and one that will be the same size as the vehicle's prototypes. The analyst went on to say that in addition to being 15 to 20% smaller than the original Cybertruck, the smaller version will probably be introduced at a special virtual event in March 2022. Chowdhury mentioned that the original concept of the all-electric pickup truck would be significantly altered for the vehicle. The seasoned source went on to say that Steel Dynamics, a business constructing a facility roughly 100 miles from Gigafactory, Texas, would be the exclusive provider of the Cybertruck. Aluminum exoskeleton, both the smaller, yet-to-be-announced model and the full-sized version of the all-electric pickup truck are said to meet this requirement. The analyst specializing in global stocks analysis expressed his doubt that Tesla will bring up the smaller Cybertruck in the upcoming Q4 fiscal year 2021 earnings conference because the business is probably going to hold off on announcing the vehicle until March. Tsla concluded by restating both his optimistic $1,500 per share price objective for the firm and his overweight rating for Tesla stock. It's interesting to note that CEO Elon Musk previously considered introducing a smaller cyber vehicle. Many Tesla owners voiced their concerns about the Cybertruck's size after it was unveiled, saying that it would probably not fit in some small American garages. The CEO later claimed that the production Cybertruck would be roughly the same size as the prototype that was presented in November 2019. but Musk had briefly entertained the concept of narrowing the vehicle's width and height. Musk did, however, acknowledge that it would make sense to build a smaller Cybertruck in the long run, given that the vehicle's original size might have been a little too big for some regions. It appears that Tesla is anticipating significant demand for an all-electric full-size truck, as well as one that is somewhat more compact and possibly more reasonably priced, if the projections made by the global equities research analyst turn out to be accurate. Among the strongest secular growth stories on the market is Tesla. For analyst Garrett Nelson told Yahoo Finance Live that it's critical to understand when inflationary pressures are truly impeding development. Although Tesla's growth is primarily driven by company-specific factors, such as the rise in electric vehicles and the opening of 2 new factories, one in Texas, which will have a grand opening in 2 weeks, and one in Germany, which held the ribbon cutting, the company is not immune to inflation. According to Nelson, the opening of these 2 new plants will significantly boost their yearly vehicle production capacity, and as a result, they are about to enter a totally new growth phase. This is what will primarily fuel future earnings development. He continued by saying that they can actually scale up with these bigger factories over time. Reaching maximum capacity requires several months of work. It's a time-consuming process. According to Nelson, Tesla's approach is to increase production by any means necessary. By 2030, they hope to have grown their yearly auto sales from roughly 500,000 vehicles sold in 2020 to roughly 20 million. This represents a 40-fold increase in growth that is required. Therefore, they will need to build additional facilities to really speed up their growth. The plants in Texas and Germany had effectively increased their number of operational factories from 2 to 4, and it is our understanding that they are also exploring other factories globally. Building factories across the globe, he claimed, will significantly aid Tesla's expansion into other markets and help the company achieve economies of scale. These factors should help reduce costs as the Russian invasion affected Ukraine, endures sanctions that are driving up oil prices and raising consumer gas prices at the pump, according to oilprice.com. Many are questioning whether the incident will hasten the adoption of electric vehicles in general and the growth of Tesla's stock price. Earlier this month, the price of a barrel of Brent crude oil reached a record high of $139, compared to benchmark averages of just $70 in 2021 and $43 in 2016. Goldman Sachs and J.P. Morgan analysts predict that the company's oil barrels will rise to $135 and $185, respectively. Presently, the 14-year price increase coincided with U.S. President Joe Biden's efforts to target Russia's oil operations, which are the country's main economic engine through sanctions. Biden also noted that there are costs associated with this decision, which are mostly borne by consumers at the pump and may accelerate the switch to non-petroleum vehicles beyond what was previously anticipated. Automaker EV, given that the news coincides with Tesla receiving final approval to start production at its new Gigafactory in Berlin, Brandenburg, and Giga Texas sites with the help of the new factories, the company may be in a unique position to profit from the price increase. Additionally, Tesla plans to increase its yearly production output to about 2 million vehicles this year. Analysts point out that Tesla has a major strategic advantage thanks to its Gigabillion in Grünheide, Germany. Despite ongoing supply chain problems and shortages of semiconductors, Daniel Ives of Wedbush describes the company's momentum for deliveries as extremely solid. In a note, I stated that he cannot overstate how crucial Gigabillion's production is to the success of Tesla's presence in Europe and around the world, restating his $1,400 price target for the company's stock along with an $1,800 bull case price target, in addition to the possibility that high gas prices will lead people to purchase electric vehicles. In light of the record oil prices, Tesla's stock has already started to rise. What price objective do you believe Tesla stock will reach? Post a comment below.